Let's look at ACC. 3.8% numbers have just come. It's down 4%. Numbers at the bottom of your screen. And by all means, it seems to be a miss. You can see the total income is lower. We have the volume data. We have operating EBITDA, PAT numbers, and all of that are looking in much weaker than estimates. Let's just pull up all the flashes and see what's happening. So, if you look at the numbers, firstly, they are a miss as far as the PAT number is concerned. So PAT was expected to be around the 140, 150 crore mark, and it's coming close to 81. Not sure if there is any exceptional item, but the sales is looking weak. The volumes are looking in weak, and maybe that's the reason why, that sort of a reaction is actually seen in the market. There you go with the numbers. 2,521, that's clearly showing that there is a volume or a price decline for ACC. 2,571 for the name. PAT has come in at 81. ACC has given some statements that they expect volumes to pick up on the back of new capacity. However, it may take some time to happen. Not that good for ACC. Numbers are looking in on the weak side. Siddharth Khemka, Head Equity Research, Centrum Broking, is now joining us. Siddharth, good afternoon. Cement companies were in a sweet spot, but as an investor, would you know that Q2 is a weak quarter, and that's why don't read much into the numbers?
Yeah, hi, good afternoon. Yes, so Q2 generally is a weak quarter for cement companies. They are in a sweet spot, and the company and the stock prices are at their highs. So right now we would be, so any correction in these stock prices would give an opportunity to enter these stocks. So we would be, it's more like a buy on dips or buy on correction sector for us right now.
Right, but again, you would not be in a hurry to buy. You would evaluate the numbers, you would look at the commentary, and then probably decide to go overweight on any of these large cap names?
Correct. Yes. Perfect. So that's what we are doing. We have cement was a sector which we had been overweight for last 1 year, and it has played perfectly well. So at this juncture, to add on to the weight, we would want to wait and see the commentary, see how things pan out from here, and any correction, as I said, would be an opportunity to enter these stocks again, especially the large ones.
Right. So for cement as a sector, how should one look at it? If you just look at cement as a space, as volumes taper, you just tend to see, numbers coming down quite swiftly. Is that the operating leverage that they are at? So when the volumes would recover, margins would be much higher?
Yeah, so there is a bit of operating leverage. We have seen realization coming down. However, volumes is something that has been supporting the cement pack. They have been reporting anywhere between 8 to 10% volume growth, and that has helped improve the utilization levels across the board. So operating leverage is something that has been helping them. Lower commodity prices is again another factor which has helped them in improving the margins. And at the same time, the industrial activity pushed by the government's focus on spending, as well as some of the rural spending that is expected to pick up, should do well for the cement pack in terms of higher volume and obviously better margins and that operating leverage.
Right. How would you